Hello, I'm Sami Zaidan. This is Counting the Cost on Al Jazeera, your weekly look at the world of business and economics. This week, the mighty dollar. For all the talk of emerging challenges, when push comes to shove, the dollar proves it's the world's reserve currency. We find out why. A financial system riddled with bad debts. India attempts to revive the country's fourth largest bank as depositors yank their cash. And Saudi Arabia's oil price war with Russia could send crude prices to $10 a barrel. How will an oil producer like Indonesia cope? $9 trillion and counting. That's what rich nations have spent so far on the coronavirus pandemic. They're trying to make sure there's a functioning economy as they get to grips with the outbreak. Well, the damage done is likely to surpass the financial crisis, maybe even the Great Depression. What is known? It's the worst economic crisis in the last 70 years. Well, at this time, there's a rush to safety. The 11-year bull run in U.S. stock markets is over. And there's one safe haven everyone is banking on, and it's not gold, it's the dollar. For all the talk that the dollar would lose its reserve currency status, it's proved to be just that. Talk. Well, let's take a look at some examples now. Emerging markets have borne the brunt of the rush for dollars. Indonesia's rupiah lost almost 14% of its value since the beginning of the year. The Russian ruble and Mexican peso have lost a fifth of their values. The problem for emerging markets, they might want to cut interest rates to stimulate corona-hit economies, but that would undermine their currencies further. And interest payments on dollar-denominated debt has just soared, unbalancing finances. Well, sterling fell more than 10%, or to a low of $1.14, a level last seen in 1985. The UK's divorce from the European Union has broken the resilience of the pound, which was considered to be tethered to the fortunes of the continent. Well, not anymore. The best performing currency just happens to be the Argentine peso. Best performing, of course, in the sense it's fallen the least compared to other Latin American nations. Having capital controls has certainly helped, though. Now, the dollar has been the world's leading currency for more than a century. Today, more than 60% of all foreign bank reserves are in dollars. Let's find out what happened to all those challenges to the dollar's crown with Jamil Ahmed. He's the global head of currency strategy and market research at FXTM. He joins us via Skype from London. Good to have you with us, Jamil. So this crisis has shown it's just been a lot of talk about the dollar ending. It's still the world's current reserve currency of choice, right?
Absolutely, yes. Listen, the dollar not only remains the king. If this was a Game of Thrones, the dollar is on the Iron Throne. It has been on the Iron Throne for an extremely long period of time. It dominates all of the seven kingdoms under it. And this has been something that's been in play for close to a century now, since war times. And we are still 20, 30 years away from anybody being able to say that they could challenge the dollar. Yes, some currencies have made progress, but the dollar's still funded everywhere globally for so many different reasons. And we just look at the dollar performance over the past week. We had the dollar strengthened by close to 5% on a weekly basis. That's its strongest performance since 2008. Currencies such as the British pound, as a result of the dollar domination, plunged to levels that have not been seen in 35 years. Gold recently had its worst year since the late 1980s. And even the Australian dollar has lost over 20% year to date. There is no contender to the dollar. This is the end game, but the dollar strength is so strong right now, it's superior. Like if you're a sports fan, it's like watching Liverpool in the Premier League this season. There's no second challenger.
You said there, this is the end game. Hang on, Jamil. Does that mean the yuan has squandered its chance? There was a time when some were predicting the yuan could be the world's reserve currency.
This is still unlikely, and we don't see this for, even this being a possibility for the next 20 or 30 years. For as much progress as the Chinese yuan and the Chinese economy has made to global contributions over the past 20 years, it still has so much more further to go. For example, if we look at the payments of the dollars, we look at it at foreign exchange reserves. international debt, international loans, foreign exchange turnover, the dollar is still supreme. And actually, the only second character that can come into play on this is the euro. And even the euro has had threats before of its sovereignty and whether the euro could collapse. The Chinese yuan in that table is nowhere near. Can it be one day? Yes. But when you have a
It's just
reserve currency,
2%, isn't it, right now, with the euro at about
exactly,
20%? But it's been a bit of a disaster.
exactly.
This rising dollar, a disaster for emerging markets, though, right?
It is. We have a recipe for disaster right now when it comes to emerging markets' performance and their currencies. You have a global disease outbreak that is a health disaster. This is going to contribute to a global recession, which means that there's lower growth everywhere. As a result of this, stock markets have been in free fall, which essentially means there has been no appetite towards emerging markets because they are seen as riskier assets that you don't invest in uncertain times. And with this, you've got the dollar that is strengthening across the board. Just to name you some of the casualties, the Russian ruble has declined by close to 30% this year. The Brazilian real as much as that too. The Indian rupee has hit a record low. The South African rand has weakened by 20%. And there's been simply no end in sight when it comes to prisoners against the dollar's reign here. All emerging market currencies have declined year to date. And even those that haven't declined as much, such as the Malaysian ringgit, as one example, it still has declined by beyond 5%.
Even sterling, though, I mean, it was once upon a time a very stable currency. What's happened the last week or so has shown, I guess you could say, the importance of fastening your seatbelt on the wild descent down.
Not only fastening your seatbelt, like the glass shattered on the British sterling over the past week. Up until the beginning of last week, we can say that the British pound was performing pretty resilient against virus concerns. Out of all of the major currencies, including the euro, the Australian dollar, Swiss franc, Japanese yen, it was the most volatile to the virus concerns. But as soon as that virus epidemic intensified into the UK and concerns over a UK lockdown, which essentially is what we're in right now, came into play, the British pound saw its worst performance in decades.
Now, explain this for us. The Federal Reserve is pumping dollars as fast as they can into the system. It's even given a commitment for what's been termed as quantitative easing infinity, yet the thirst for dollars doesn't end. Why?
Essentially because everybody wants a dollar. Cash is king right now. And by cash, that means we're sticking dollars underneath our pillowcases. That's essentially what the theory is in the market right now. Essentially, even despite despite two emergency Federal Reserve interest rate cuts, the Federal Reserve announcing a huge stimulus program of quantitative easing, everybody still wants the greenback. That's because the greenback is funded in so many different methods, from loans to debt to oil transactions, gold, you name it, everything's dollar dominated. And at the same point, it's been a world reserve currency for a century, since war times, and that will not change anytime soon, which gives precedent towards why everybody still wants the US dollar.
All right, interesting times it is. Thanks so much. Oil prices could be headed to $10 a barrel as the global economy heads towards recession. And the oil price war between Saudi Arabia and Russia is adding to the crisis. Problems are piling up for countries that are both importers and exporters of oil, such as Indonesia. Al Jazeera's Jessica Washington has the story from Jakarta.
Around the world, the coronavirus outbreak isn't just a health emergency, it's also an economic one. Disruptions to supply chains were a given, but such a dramatic price war on the oil market was unexpected. A falling out between Saudi Arabia and Russia sparked the sharpest one-day crash in oil prices since the Gulf War. Indonesia is one of the countries that's both an exporter and importer, and economists think it could be a challenging time for the country and its oil industry.
The exporters will really going to feel the pinch. I think the first is with this coronavirus impacting the global economy, the Chinese economy will feel the slowdown, the global economy will feel the slowdown.
Like almost everything in recent weeks, the slump in oil prices comes back to the coronavirus outbreak. China, the world's biggest importer of oil, was turning back tankers as its economy began to contract. Saudi Arabia called for a massive cut in production, but Russia disagreed, and in response, Riyadh ramped up production. Indonesia is a net importer of oil. Production has been steadily on the decline and domestic consumption on the rise. Some fear volatility in the sector may not bode well for the future prospects of Indonesia's domestic industry.
With lower price, you're not seeing attractive enough for the investors, for the foreign investment to come into the oil sector in Indonesia. And what we need the most right now is investment coming in to really push the level of production, because our oil lifting, the production of oil currently on a declining path.
Executives at Indonesia's state-owned oil company Pertamina are weighing the prospects of an indefinite price war.
Secara logisnya,
we will add to our stock because the price is low, but demand is also low. It all depends on capacity.
As well as the downside, there are pockets of opportunities for some economies, but the general instability isn't welcome for most.
Income from exports will fall. It may be good for our imports, but there's still less money for the government. This is the impact of the virus.
As the virus continues its spread, there may be more economic shocks on the way. Jessica Washington, Al Jazeera, Jakarta.
Well, even before the coronavirus crisis, India's financial institutions were causing concern because of their large debts. Yes Bank, the fourth largest lender in India, was taken over by the government this month. That's the third rescue this year. Al Jazeera's Elizabeth Puranam reports from the capital, New Delhi.
Some good news at last for Yes Bank customers, nearly 2 weeks after the government took over India's fourth largest private lender. The withdrawal limit of 50,000 rupees or $630 imposed during the government takeover is due to end on Wednesday.
I was quite fearful because see, it's a hard-earned money and we are just putting all our savings in one particular bank. So that's not easy for working class people. Hopefully, we were patiently waiting for some positive response. And this response was quite quick, I believe.
The government took control on March the 6th because the bank had too many bad debts and loans which weren't being repaid. The takeover led to worried customers lining up to get their money out and the government imposing the withdrawal limit. For the bailout, the government and the Reserve Bank of India brought together 8 banks led by the State Bank of India, the largest in the country. The failure of Yes Bank is again highlighting the banking crisis, involving financial institutions with too many bad loans, shadow banks which don't face the same regulations as well-known lenders, and over-indebted companies. Yes Bank's customers included some of India's biggest businesses, including the Anil Ambani Group. Ambani was once one of India's richest people.
A lot of the incremental big increase in credit was going to already promoters who were in default or were near default, who were not able to pay back their bank loans taken much earlier, like in the UPA, in the previous regime, right? So that's what it turns out. All the cronies ended up getting more loans to pay back their earlier loans.
The government has accused Yes Bank's founder Rana Kapoor and his family of laundering around $600 million by receiving kickbacks for extending loans that couldn't be repaid. Kapoor's lawyer says he's being made a scapegoat.
Fifth largest private.
Analysts say the toxic loans crisis goes beyond a few bad apples. It's the third time in a year that India's Reserve Bank has intervened to rescue a lender.
The way our bad loans have plagued our economy, our financial system in the last 5 years, both RBI and government had been hoping for a slow train wreck. They wanted to soft land the problem, so therefore they were looking away. But in this business, there is no slow train wreck. A train wreck is a train wreck. It will cause damage.
Many are asking why the government didn't notice Yes Bank's massive growth when the economy was suffering a significant slowdown.
Yes Bank's rescue comes at a bad time for India's economy, which is growing at its slowest pace in over 6 years. The government is now investigating why this takeover had to happen, but financial analysts say unless the entire sector is reformed, Asia's third biggest economy could deteriorate further. Elizabeth Puranam, Al Jazeera, New Delhi.
Well, joining us via Skype from Singapore is Darren Au, Asia economist at Capital Economics. Good to have you with us. What went so wrong at Yes Bank?
Well, what I think happened is mostly a corporate governance issue. So in particular, there was a lot of overly risky lending practices that was going on a few years ago, and it just led up to a buildup of non-performing loans and a deterioration in Yes Bank's financial position.
Now, this is, of course, the third bank rescue this year. Has the problem been solved, or should we expect more banks to run into trouble?
Well, India's banking sector it has its share of problems, and I don't think an issue like this would be so easily eliminated. And there are, of course, several measures that the government would probably put in place over the next few years or so to try and attempt to clean up whatever is going on. So,
Like
for
what?
example,
What do we
maybe
expect? What will it take to clear this one up?
so in terms of corporate governance, there's simple things like trying to adopt best practice accounting and international auditing standards, or enforcing more stringent punishments for cases of financial fraud or irregularities. One interesting thing about the Yes Bank issue is that this was a private sector bank, and it's kind of a stark counterpoint against the idea that privatization of the banking sector would help with all these issues. But I still think that if there's a greater amount of private sector involvement, there will be some improvements made into clearing up these corporate governance issues, mainly because private sector banks on average perform better, and there are less cases of fraud and financial irregularities within private sector banks than with public banks.
Well, this was a bad time for the economy even before the coronavirus. What's going on with growth, do you think?
So much of the slowdown that has happened over the last year or so can be traced back to the problems in the shadow banking sector. And what that did was it created a squeeze of credit, because a lot of risk aversion and reluctance to lend to these shadow banks started to take place after ILFS defaulted in 2018. And that basically caused investment growth to slump. And then from there on, you see this gradual, continuous slowdown since late 2018.
And one assumes coronavirus is only going to make that growth worse, right?
We're quite pessimistic about the outlook for this year right now, because the main issue now, I guess, is that the nationwide lockdown that has been announced a few days ago, that's going to cause growth to slump, because sectors like manufacturing, transport, retail, they're all going to grind to a halt. And what this is going to do is basically you're just going to see GDP growth drop, and we're forecasting it to fall to a 4-decade low.
All right, thanks so much, Darren, for coming and talking to us about that.
Thank you.
Now, the travel and tourism industry accounted for more than 10% of the global economy in 2018, creating 319 million jobs worldwide. The industry was the first to face the brunt of the pandemic as travelers cancelled their bookings. The airline industry is expected to lose more than $250 billion in revenue this year as airlines are forced to ground aircraft. So how is the industry holding up? Well, our next guest is the chief executive of travel management startup Travel Perk. Avi Meyer joins us from Barcelona via Skype. Good to have you with us. Let's start with the more visible part of the industry. That's airlines, of course. They stand to lose, what, tens of billions of dollars? They're telling their employees to take leave, sometimes unpaid leave. What sort of consequences are they facing?
And you're right. I mean, the airlines are in a very difficult spot. I have to say, like many other players in the industry, we're looking at total cancellations of most routes now for airlines. Many planes are flying actually empty just to keep the slots available. So
it's looking pretty brutal for them, isn't it?
Yeah, and they're talking about several weeks of cash left. This is a black swan that really nobody could have predicted in the industry. So many companies, many suppliers have to change their business model or go to hibernation mode or to be bailed out, because there is just no other way right now.
bailout is maybe a hope for some industries. What does it mean for a business like yours, though? You're a startup. You rely on revenue from commissions on bookings, right?
So Travelperk, we're a business travel platform, fastest growing in the world, and like all business travel related, all travel related companies, we are affected. We see decrease in bookings. That's in certain countries is 100% decrease, like Italy, for example, right now. And then we see some lower decrease of 80 to 90% in other affected countries. I think long term, we will have to change as an industry. This is going to be a moment of really reinvention of a lot of things in business travel and in travel overall. And
how do you see yourself reinventing yourself in your business?
Yeah, it's a great question. I think we started doing this change already last year, and now we're just accelerating. And two things that we're going to focus on more and more is the flexibility and the sustainability of our industry. Flexibility is obvious, right? I mean, if you think about how the world will look after Corona, I predict a pretty long period of time where you'll have corridors, where you'll be able to go from Germany to France, but not from Germany to Spain. That's just an example, because of the situation of lockdowns and new cases of the virus. And I think this is going to be with us for a pretty long time. I'm not an expert in anything related to viruses, but I'm just reading what the experts say. So for that, you have to have flexibility. And we at Travelperk have built something called FlexiPerk that allows the travelers to get a full refund of the trip for any reason. We've built it last year, and we're accelerating the investment in that. So we actually are going to hire more people now in this period and invest more into flexibility and into sustainability.
Interesting. Do you think most businesses like yours are in a position, do they have enough funds? This sort of flexible readjustment takes time, it takes money too.
Correct. Yeah, so we are fortunate at Travelperk. We have raised capital from investors, and we're a very efficient business. So we are, of course, adjusting our costs. We're reducing operational expenses. We're adjusting several things in how we do things. But of course, if you don't have the cash, or if you're not efficient as a business, it's going to be very painful. And I think many businesses are adapting now, like they should, to the new situation.
So it's interesting there, your vision of the future of this industry is this idea of perhaps corridors. We won't be in perhaps complete shutdowns forever, but there will be corridors opened and closed between places. But is your vision of this vision of the future threatened by the fact that people are migrating to things like, let's have more virtual meetings rather than traveling to meet? Let's do business more virtually and communicate more virtually and less face-to-face with social distancing kicking in?
Yeah, it's a great question. And I think that we are in the middle of the largest scale experiment in remote working, right? And I think many people will learn that for some type of meetings or some type of interactions, this is working better. It's more efficient, and you are wasting less time and polluting less, right? And some other meetings definitely have to have the face-to-face kind of human interaction. I think that if I take a step back and just think about what's right for, what I think is right for us as a world, I think it's good if we are more conscious about the effect and the cost, not just in terms of monetary cost of traveling. I don't think travel is going to go away. It's a huge industry. We talk about $1.5 trillion spent globally on business travel. And it has been growing 6 or 7% year on year before this crisis, and I think it will go back to growing after. But if we can be a bit more conscious about the decision, I don't think it's a bad thing. At Travelperk, we have released a new product called GreenPerk, for example. Just actually during the evolution of this current crisis, we announced that we're releasing it. And this product allows you to automatically directly invest in projects, UN-approved projects that reduce carbon emissions. So you travel, and then we offset for you automatically. For example, one of the projects we're supporting is efficient stoves for cooking in Rwanda, in Africa. Just one of the projects. So I think many travelers are looking for this flexibility. In the one hand, they need to travel for work, but also they want to have a better impact or lower negative impact on the planet. And I think we as a company and we as an industry, we have to adjust for that, and we have to serve the needs of the customers.
It's a lot that needs to be addressed, and it's going to take a while, isn't it?
Yeah.
Thanks so much, Avi, for coming in and giving us
Thank you very
thoughts
much
on that. Great talking to you. And that's our show for this week. But remember, you can get in touch with us via Twitter. Use the hashtag AJCTC when you do, or drop us an email. Countingthecost@aljazeera.net is our address. There's more for you online at aljazeera.com/CTC. That'll take you straight to our page, which has individual reports, links, and entire episodes for you to catch up on. That's it for this edition of Counting the Cost. I'm Sami Zaidan. From the whole team here, thanks for joining us. The news on Al Jazeera is next.